Hello everyone, my name is Jack Chapple. I upload business, entrepreneurship, investing, and finance videos almost every single day, so hit that subscribe button. Now let's get going on this. The best and worst time to invest in the stock market. What do you guys think it is? We're going to give you two historical examples of when certain people invested in the stock market and what their returns were like, and then we're going to apply that to today and teach you what is the best time to invest. So we're going to get going here on these historical examples. So everyone knows that there was a recession in 2008. You know, big stock market collapse, I guess, and housing market went down in the United States. And so that's what this is. This is what this day is. So here is the peak trading day before the recession. This day was October 12th.
So I wrote down and said the year 2017, but I meant 2007.
And so here we have the S&P 500. This is just a generic way to track the stock market, the 500 of the top companies. And so that had the peak value on October 12th, 2007. And that value was $1,561. Okay? Does that all make sense? Now, here's the bottom day. Right after the bottom fell out of the market and everything started to crash, this day was, over here, was March 6, 2009. 2009. That's what that was. And the value there was $683 of the S&P 500. Okay? So I want you to remember these two numbers specifically. And what happened afterwards? Well, we're going to fast forward here to 2017. So here's what pretty much happened. You know, stock market went back up, and then it kind of plateaued for a couple of years in there, and then it shot back up again. And now, as of today, does anyone know what the value of the S&P 500 is? Anyone know? Well, as of today, it is roughly $2,400, give or take. It's a little bit higher than that right now, but we're just going to round it up. So $2,400. So we're going to talk about the returns. So right here on October 12th,
2007,
this would be the worst possible day you could have invested in the past decade or so. That was the worst day you could invest, and the best day would be March 6, 2009, in terms of having the best long-term investment. What do you think the returns are for each of these people? So let's just say you have Joe here, okay? You have Joe, and he invested all of his money in the S&P 500. So what would have happened here? He invested right here, and then he lost about 40% of his value right here. So it was about a 40% drop, maybe a little bit more, maybe a little bit less. But he had a 40% drop in his portfolio. That really sucks in about a year and a half. So he lost a ton of money. Now, if he did not sell this, if he did not sell during the stock market collapse, which a lot of people did, here's what would have happened. Over the next 8 years or so, he would have had the growth, and that growth would have been about 55%. 55%. So if you bought this stock right here on October 12th,
2007,
you held on to it, over the course of the next decade, you still would have had a 55% return on investment. Okay? 55%. Now, what does that come out to on a per year basis? Obviously, divide by 10. 5.5% return on investment per year if you invested on the worst possible day you could have in the past decade. Think about that. Think about that for a second. So we're going to come back to this in about a minute. I want to give you this one more example, then we'll talk about this again. So now we're going to go back to March 6, 2009. So you invested on the exact day when the market reached its all-time low of the past decade. Not all-time low, of the past decade. What would happen to that person? So he bought this S&P 500 index stock for $683. If that person held on to that stock for the full 8 years, they would have had a 253% return. Or about 25% per year, roughly. 25% per year. Kind of amazing, right? So, obviously the person who invested on the worst day possible, obviously they had a better return because that's just the way it works, right? But, however, if you invest on the worst day possible and you invest in the stock market for the long term, you're going to have a great return. I talk about if you can get 6 to 10% per year, you're doing pretty well. And if you invest on the worst day possible and you're just a competent investor and don't speculate and just invest in solid stocks, you're going to have a minimum. This is the baseline of a 55% return or 5.5% per year if you invest on the worst day possible. Okay? That's quite amazing. I know. I didn't even realize that the returns were that high if you invested on the worst day possible. I thought it'd be a little bit lower. I thought it'd be probably in the range of 3 to 4%. But no, it's about 5.5% per year. And now, here's what I want to bring this back to. What is the best and worst time to invest in the stock market? Now, obviously, if you're to invest at the bottom of the market here, that's the best time. If you were to invest at the top of the market, that's the worst time. However, you cannot time the market. I mean, I thought the stock market correction would have happened roughly around this time. I thought it would have happened right now. Because I made the video in probably December of 2016 saying it should happen in the next few months. Although I did say 2017 to 2018, but I was expecting early 2017, mid 2017. I was wrong. I didn't time the market properly. So, the best time to invest in the stock market is always. The best time to invest is all the time. I know that, it depends on what's going on in your life too. Like I've made a video about how I didn't want to invest in the stock market in the last 6 months because I was focusing on growing my businesses. And people took that as, well, you're not investing in the stock market, but you talk about stocks all the time. Like that's so whatever, hypocritical or sleazy or whatever. And I said, no, I just want to focus on my business. I would invest if I could. If I had time, if I wanted to invest my money that way. I want to invest my money in a different way right now. However, the best time to invest is always. In fact, I'm reading Tony Robbins' book, Unshakable, and he always says, the best time to invest is all the time. The worst time to invest, here we go. The worst time to invest is never. As long as you are a somewhat competent investor and you don't invest in stupid speculatory stuff or commodities, then you should have a good return. Invest in solid companies that are pretty much guaranteed to not go away in the next 10 years. So companies that aren't in tech and so on, right? That are our staples. So that's what I wanted to talk about mainly in this video, about how the best time to invest is just right now. That is the best time to invest right now. We could, right now, in 2017, in May 2017, today could be the peak of the market for all we know. There could be a giant collapse coming tomorrow, but yet you will still get a 5.5% return over the next 10 years if you hold on to it. Most likely. Most likely. Now you're gonna have a hurting here. You're gonna be hurt for 2 years, even if you invest on the top day. As long as you don't freak out and you realize that your money is going to come back, then you'll be fine. Because the people who lost the money during the recession, it wasn't people that had large investments in the stock market. It was the people that sold off their investments during the recession. The people who sold off their investments, they're the ones that lost money. If you held on to your investment through all the rough times, you'll get that 55% return. And now, actually, the other thing too is this isn't even taking into account reinvestment in the stock market. So if you were to collect dividends along the way, maybe you've invested hundreds of thousands of dollars because you got a lot saved up and you're an old person, and you invest tens of thousands of dollars per year, this return can go from 55% to 80%, especially if you reinvest at the bottom here. And same thing goes for if you were to invest here, instead of 253%, if you were to reinvest money, that could be 300% or 350%. Quite amazing numbers here. And yeah, so the best time to invest is always, and I have a few other things I want to talk about here. So if this is your first time and you're a beginner, first of all, you can go check out my program actually. Stock market program, link will be in the description. I cover if you're just starting out or if you're an intermediate, that program's for you. It'll teach you how to invest. But now, I talk about this. If you are just starting out and you want to start investing right now and you want to time the market, don't invest everything you have right away. If you want to invest $5,000 and you only have $7,000 in the bank, then don't invest all that $5,000 at once. Maybe invest, I always say, invest a minimum of $500, but I would recommend on your first go, $500 to $1,000 on your first trade. Because, especially if you're investing, because we're closer to the peak right now than we would be to this time, than the bottom time. So a lot of beginner investors, they're going to get screwed over. Because what's going to happen is they're going to invest near the peak here, and then in the next 3, 4 months, 1 year, 2 years, the market's going to take a crap. And they've never experienced anything like that before. So they're going to be like, sell, 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 sell. I just want my money back and I'll reinvest it in something else because my stocks are doing crap. And no, just hold on to it. Just don't think about it. If we're about to take a stock market dip, a crash, just don't think about your stocks for like a couple of years. Be like, okay, they're going to come back. We're just going to forget about those investments for a couple of years. They're going to rebound and they're going to show me a good return. That's what you guys should be doing. And yeah, so if you're just starting out, make small investments. So what should you take from this video? I guess one thing is that we're closer to the peak. We're closer to the peak than anything. I don't know if we're going to be, if today we're at the peak here, or if we're right here, or if we're in 2006 or 2007 right now, because the market collapsed in 2008. So I don't really know where we are in this cycle right now, but I do know that we're close to the top. We have to be close to it. That's just the way it works. And so be wary of that, but also realize that even if we are at the peak, it's still a good time to invest. If you were to invest in the long term. Now here's the other deal, I guess. I guess this is how we're going to close it out. Because you got so many guys on YouTube telling you, you got the penny stock guys, right? There's a handful of those big guys talking about investing in penny stocks all the time, how you can become a millionaire. Sure, you can become one. But there's like a 10% chance that penny stock traders actually become millionaires and do well. The vast majority of them lose money. That's the way that works. And then you got the other guys out there giving you stock tips all the time, being like, this is the stock I like, and this is what you should follow. Now, they should be careful because they could probably get sued in the future for giving out stock tips and stuff to the public. But they always are betting on speculation. They're always betting on like, this is what I think about the Snapchat stock, and I think it's going to go up, and I think that this stock's going to go down, and in the next 3 years, and then you can sell that stock off once it gets really high, and then you can reinvest that in another stock. And for most people, for 99% of people, you shouldn't be investing like that, because it doesn't suit most people's lifestyle, and you will probably lose money for the most part. So for the average person, and even for just most people, not just average people, for poor people, middle class, upper class people, you should be investing for the long game here. The long game. And you'll see a good return. So I think that's going to wrap this video up. What do you guys think? Do you guys agree? Well, these are numbers, so you can choose or not. You can choose whether or not to agree with the numbers. But yeah, what do you think of this? What do you think? And are you okay with investing in the stock market right now? What do you guys think of the market? Do you not want to experience that dip here? That dip. You don't want to lose 40% of your money in the next 2 years. Potentially more, potentially less. Are you guys wary of it? What do you guys think? I mean, I think I want to get this message across to a lot of my subscribers, because people think that I'm not investing because I'm wary of a stock market correction. No, it's just I want to invest in a different way. So I want to mention to you guys, if you guys want to invest right now, feel free, and you'll still get a good return over the next decade, most likely. So that's going to wrap this video up. Make sure to check out my stock market program in the link below. I don't know how much it is. It's like $50 right now, $57. So go check that out if you want to learn more about how to invest in the stock market. And I'd like to thank you very much for watching. You're all very beautiful people. I'll see you guys in the next video.